This is the Kason Point interview series. Thank you for joining us. I'm John Kason, a portfolio manager and certified financial planner at Fieldhouse Capital. I'm the lead manager of the Enhanced Pension Plus Fund, which allows Canadians to access a balanced strategy that includes both traditional and pension or alternative asset classes. I'm pleased today to be joined by Glen Murray. He's President and Chief Investment Officer of Capstone Asset Management and lead manager for the Capstone Mortgage Pool. Glen and his team have enabled investors to participate in carefully underwritten construction mortgages and benefit from a reliable monthly income stream since 2013. Thank you very much, Glen.
It's good to be with you.
As a result of the recent COVID-19 crisis, Glen, are you seeing any changes in the underwriting and risk management space for the mortgage pools that you manage?
Yeah, we definitely are. As you know, our Capstone Mortgage Pool focuses on construction and development strategies, where we've already been adjusting some of our requirements to better reflect the uncertainty that surrounds the overall economy today. To begin with, the type of project and where that project is located is of even greater importance as we look to de-risk a project's investment. Additionally, we are requiring a greater amount of the developer's own equity to be invested in the project, increase the collateral, and really looking for stronger metrics of what the project will return to the developer. And if warranted, we will also look at increasing the yield.
Glen, many funds in the alternative income space distribute most of their income, and this forms the basis of client returns. This approach in the past has led to many companies finding or creating less than desirable results. Do you see your funds keeping distributions in line with historical levels? And how does your team balance this income distribution with ensuring the portfolios are in good standing coming out of the crisis?
That's a challenging question to answer in general terms, as the situation facing each fund will be different during the season. However, if we look at the mortgage pools, then typically things like their obligations to continue to fund existing projects, redemption demand, new capital flows, and then obviously any non-payment of interest will impact the decision of what to distribute and what steps are necessary to ensure they remain healthy coming out of the crisis. At Capstone, this is continuously reviewed to ensure we can meet the needs of our clients, maintain the strength of the portfolio. We've seen more variability this year in our distributions, particularly over the last few months, but we're definitely still tracking towards our historical performance range.
The COVID crisis has created some concerns over liquidity and the value of security within the alternative lending space. What has been your experience, and what challenges and opportunities do you see as we begin to recover?
Yeah, I believe all crises provide opportunities for investing. So I expect this terrible one will be the same. There will be negative impacts overall, but there will continue to be markets and asset classes where investment opportunities will exist. At Capstone, we believe the construction and development will continue to provide those opportunities. There'll be greater focus, however, on sectors and locations that stand to benefit from the COVID-19 crisis. Sectors such as retail and office space will generally not be appealing as we move forward, so not ones that we would be looking for. However, we do believe opportunities will exist in the suburbs for residential properties. People are going to start to rethink living in the big city, the work from home opportunities and the need to commute, along with the extra space that the suburbs can provide to afford one a different lifestyle versus kind of what the city has often afforded people previously. So the suburbs versus the city will be very much in focus. So at Capstone, we have historically looked for investments in properties where demand comes from multiple sources and remain through multiple economic cycles. COVID-19 won't change that for us, and that will continue to be our focus. We'll primarily be looking to invest in things such as townhomes, stacked townhomes, apartments, and entry-level single-family homes. The landscape for opportunities will adjust, and the market will need to respond to that changing demand. but maintaining awareness of where the supply will be weak and the change in appetite of demand is essential as we look to position investments going forward.
Glen, you've been really gracious with your time today. Thank you for your insights.
Thanks, John. We enjoy working with you. Bye for now.
Today's investors and their portfolio can greatly benefit from incorporating well-managed alternative or pension-style assets. To learn more about how this asset class can benefit your portfolio and financial plan, contact us at kasonpoint.com. I'm John Kason, Portfolio Manager and Certified Financial Planner.